Equities turn red, dollar gets a boost from risk-off trends. Wall Street indexes closed higher on Tuesday, with the Nasdaq Composite registering another record close amid upbeat economic data. IHS Markit's preliminary Composite Purchasing Managers Index rose to 46.8 in June from 37 in May. The Services Sector Index rose to 46.7 in June from 36.9 in May, and the Manufacturing Index recovered to 49.6 compared with the 39.8 previously seen. Also, Treasury Secretary Mnuchin said he anticipates a new round of coronavirus stimulus to pass Congress in July. The Dow Jones Industrial Average rose 0.5%, the S&P 500 gained 0.4%, and the Nasdaq Composite Index rose 0.7%. Asian markets were mixed but mostly edged higher on Wednesday. The Nikkei 225 in Tokyo closed its trading session virtually unchanged, while Hong Kong's Hang Seng Index was down 0.1%. Shanghai's Composite Index was 0.3% higher. Amid the lingering coronavirus concerns, stocks were helped by remarks from U.S. Secretary Treasury Mnuchin. He said that the next U.S. stimulus bill will focus on getting people back to work quickly and that he would consider a further delay in tax filing deadline. In a sign of further deterioration in investor sentiment, European stock markets finished lower Wednesday. Data showed that the IFO Business Climate Index for Germany rising to 86.2 in June from 79.5 in May. Despite the number coming in slightly above consensus, the report did little to ease the selling pressure in the regional markets, as a surge in coronavirus cases around the world spooks investors. White House Health Advisor Dr. Anthony Fauci warned earlier this week that parts of the U.S. are beginning to see a disturbing surge in COVID-19 cases. Germany, meanwhile, reported an outbreak of COVID-19 cases at a slaughterhouse in Lower Saxony. As a result, the Pan-European Stock 600 closed down by 2.7%. Of note, more than 2 million people in the U.S. have been infected with the coronavirus so far. European markets were also hit by the news that the U.S. is considering $3.1 billion worth of new tariffs on products from France, Germany, the UK, and Spain amid a long-standing dispute with the European Union over subsidies to large civil aircraft manufacturers. Wall Street stocks closed sharply lower overnight amid an increase of coronavirus cases and concern over trade friction between Washington and Europe. California, Texas, and Arizona have all seen new spikes in cases, fueling concerns over the resurgence in the pandemic in multiple states that could hamper the economic recovery. Meanwhile, the International Monetary Fund downgraded its outlook for the world economy, projecting a significantly deeper recession and slower recovery than it anticipated just 2 months ago. Meanwhile, dollar demand surged decently amid the prevailing risk aversion, sending the Euro-USD back to 1.1250 after failed bullish attempts around 1.1350 earlier this week. Earlier on Tuesday, the pair extended local losses to 1.1240 and could threaten the 1.12 handle if risk sentiment continues to deteriorate. According to the GfK Institute, Consumer Sentiment Index improved to negative 9.6 for July versus negative 18.6 previously, while beating the forecast negative 12.0. U.S. job claims, durable goods, and GDP data are due later this week. Oil prices declined dramatically on Wednesday, even derailed the $40 handle briefly as rising coronavirus cases in many countries raised concerns about efforts to restart the global economies. Also, the U.S. government data reveal a third straight weekly climb in domestic crude inventories. The Energy Information Administration reported that U.S. crude inventories rose for a third week in a row by 1.4 million barrels for the week ended June 19th. Earlier on Thursday, Brent settled marginally above $40, remaining under pressure. That is all for today. Thank you very much for watching. Please click subscribe to always be in touch with the latest market news.